Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for Tuesday, July 23rd, 2013. Well, a continuation of the trend to the upside today. The candle we're analysing is this white body candle here. That final candle is still developing. And a white body candle in line with the previous four trading days, consecutive trading days of white body candles where we had the buyers making net bullish progress. Today we've seen the buyers close with very strong control of this market by closing up above the midpoint level and closing up towards the high. We did also see the sellers testing down below the important 1329 level of previous support and resistance and being rejected from there to the upside, so suggesting that the buyers are still quite strong in this market. One cause for concern is the large contraction in the size of the body compared to the previous day's trading, and that suggests that the buyers don't have the amount of momentum to the upside as they had for the previous day's trading in net terms. So they made a substantial amount of net bullish progress on the day between the open and the close for the previous day's trading. They've maintained that bullish progress, but it is substantially reduced on the previous day's trading. So there is some concern that it could be some sort of a test to lower levels, but I doubt that it would be significant if it does occur. We do have strong support once again at this 1329 level where we saw the market rejected from today, and that should be a very or a fairly strong level if the market does test down to there again. But if the market does trade down through there and potentially change the trend, we do have strong support at 1309 and then to the round number support at 1300, which was previously strong resistance. So that should turn into very strong support for this market. Now, in terms of the Fibonacci extension, we're examining the relationship of the current first time frame uptrend to the previous time the market was trending up. And here, very interesting what's been happening in this market for all of this time from the 8th of July. Technically, even through this congestion area, this market was continually in an uptrend. So there was no lower high and lower low all through this time period from the 8th of July, and it really says something about the strength of the buyers in this market. During that congestion area, we had one decently sized black body candle where the sellers took control. So since the 8th of July, only one trading day where these sellers were in control and found some commitment. And it really does say something about the strength of the buyers in this market now. The problem is, though, the further that we go on with this trading, the closer we are getting to a reversal. So there is potential for a reversal. But today, the market interacting with the 161.8% level, testing exactly to that level and failing to close above there, combined with the squeezing up of the body of the candles, suggests that there is potential for a change of trend. But considering that short-term dynamics aren't totally favouring the sellers, that the buyers are still in control and they've been committed to taking this market higher, there is still good potential for this market to trade through the 161.8% level. In terms of the Fibonacci retracement, we are in expansive mode of that. Previous day's trading, we saw the market trade in a bullish manner above the 161.8%. This suggests that the next target will be the 261.8% at 1364, and that's probably more in line with a target that the market could reach. And let's watch the market if it does trade up to around that level. In terms of patterns in this market, and if you recall previously I highlighted this wedge type pattern that we saw develop here. We had the prior trend leading into the pattern, the congestion, the peaks and troughs within the pattern converging. Now we've had the very strong bullish breakout and the close up above the upper barrier of the pattern, and our target is the measured move, and it's the distance of the trend leading into the pattern projected up from the breakout, and that gives us a target around the 1391 level, coinciding with this previous resistance around here and coinciding with an area roughly around the top of the bottom of the cloud. So there is a possibility of this target being met if we do see the buyers sustain this upside momentum that they've found for the previous month. So that is a potential target. This has turned out to be quite a good signal here at the moment. Now, in terms of Ichimoku, obviously still a bearish market in that long-term time frame with the market trading down below the cloud. The market has been retracing substantially towards the cloud, trying to find that equilibrium. So we had the market exhibiting a very large amount of disequilibrium when trading down below the cloud and a long way away from the cloud, and we have been attracted back towards that cloud, and that isn't unusual for that to happen. There is good potential for the market to find resistance around the bottom of the cloud when we do interact with there. So if we don't interact with it over the next day or so, the area of resistance offered by the cloud will actually come down to meet the market. So the cloud offers a dynamic area of resistance and will be moving lower. If we move forward just slightly over the next week or so, this area around the cloud is quite small, and that does suggest that the resistance around that level is quite weak. So if we see this market trading sideways for a week or so, there might be some potential for the market to break out above the cloud. So let's be aware of that. Can't preempt that yet, but there is a possibility of that happening. But at the moment, the market is still bearish in that long-term time frame with us trading below the cloud, and the a likely scenario is to trade to higher levels and then sell off once again. We do have a bullish market in the medium and fast term timeframes here, with the market trading up above the Kijun Sen and the Tenkan Sen, and we have had a crossover of the Tenkan Sen above the Kijun Sen, giving us a buy signal, but that has occurred below the cloud, so it is a very, very weak signal. And obviously it's a weak signal because it's likely that the market will interact with the cloud if it does trade up to around that area. Looking at the Chikou span, that is remaining below the current price action, so it's confirming what we're seeing in the longer time frame, but not confirming what we're seeing in the short-term time frame. Now, interestingly, if this market continues trading up over the next few days, we may see the Chikou span cross above the price action, and that will give us more confidence in the signals that we're seeing in the fast term and medium term time frame, so let's be aware of that. But here we have a likely scenario of the market continuing this bullish activity, testing up to higher levels, and then perhaps selling off, so be prepared for that. Solid support at 1329, and even stronger support if the market does come off once again down around the round number 1300 level of previous resistance and now support.